Hey, Billy and Liz, this is Javier. Just wanted to hit you up with this information regarding the payment for your potential refi to give you all the information you need to make an informed decision. I was going to get this to you yesterday, but I was hoping pricing would improve. It did not. It actually got a little bit worse. So, like I told you yesterday, we're making the assumptions based on when we lock in the interest rate and all the other details. But here's what I wanted to share with you real quick to give you an example of where we are right now as it relates to this whole thing. Now, what you see here is basically a actual screenshot of the software that tells us all the information and a couple of things. We're talking and basing this on $490,000 value, which is what you told me, and that's what will ultimately determine everything as it relates to cash out and so on. Uh, Obviously, that comes in when we order the appraisal and the appraisal report comes in. We really don't have a whole lot to do with it. Also, this is on a loan amount of $375,000, which is what you see right there. This is based on an interest rate of 4.750. Got a little worse than when I was there with you, and it can still fluctuate either way. But I'm just basing it right now on what I would call worst case scenario, or at least on that scenario as well. It's a 30-year or 360 months when the loan is for 30-year fixed. There's nothing variable about it. And we would only take you to 76% or 76.531 loan to value. Loan to value means the difference between what the loan amount would be based on what the property is worth. So what that means for you is we will leave you with at least, or I'm sorry, around 25, 24% of equity. So that's a lot of equity that you still have in your home. Now this is on a conventional loan with no mortgage insurance whatsoever. So we would be able to take away the whatever 300 something dollars you're paying right now in mortgage insurance and dump that and basically replace it with the cash out that you would receive. Now, in this example, the only thing I don't have, I took a picture of your mortgage statement, and on your mortgage statement, it tells us how much you're paying in principal and interest, and also how much goes into your escrow account, which is basically your taxes, property taxes, and your homeowner's insurance. It doesn't tell us how much exactly is for your homeowner's insurance. So this payment will not include that. We will have to add that. I suspect you're probably paying $80, give or take, excuse me, on a monthly basis, and that's what I'm guessing. So this is principal and interest of $1,956 with 18 cents. We're talking about $373.71 for property taxes, which is what you're paying right now. What we're missing here is the hazard insurance, which I suspect is probably $70, $80 or so. But based on what I'm showing you right now, you would be at a payment of $2329.89, $2,329. That payment does not include the hazard insurance, which is the smallest of all the things that you currently pay right now. $2329. You currently pay $2365, but we are not including the actual homeowner's insurance, hazard insurance as it's called. Again, whatever you're paying now, you would just simply add it to this, and that's what your final payment would be. It would be fixed for 30 years. But this also represents $50,000 going right back to you. We're using $50,877, but I'm just calling it $50,000. So that would be $50,000 that you would be receiving, and the only thing that you would actually be seeing going up in your payment from what you're paying right now is the cost of your hazard insurance, which I think you would agree is pretty cheap money as it relates to the capital you were mentioning you would like to have for your business and so on. So again, that's what that would look like. $2365 is what you're paying right now. $2329 will be your new payment plus the cost of your hazard insurance. So we will find out what that is. We're going to be asking you for some paperwork if you decide to go ahead and move forward. We did the initial setup of the actual refi. I just need to hear from you whether or not you want to proceed. If the answer is yes, then we will get on it to try to expedite this. Keep in mind that we have not underwritten your actual loan yet, so we're basing everything on the fact that it will go through full underwriting and that you would qualify with the hard approval, which we cannot get you until we know that you want to proceed. And I think that we can go ahead and do that based on how quickly you get back to me as well. We will order the appraisal. I'll get you the order form so you can give me your credit card number for the appraisal. Once the loan, and only if the loan closes, then I would go ahead and reimburse you for the cost of the appraisal 100%. Whatever it costs you, I would simply pay it to you. as a form of reimbursement for that as well. Now, keep in mind one more thing that you do have right now with your lender. Let me fast forward just a little bit. You do have right now an escrow balance of 2,900. I told you we will be collecting money. You won't come out of your pocket. We'll just add it to the loan so that we can set up a new escrow account to pay taxes and insurance, as required. So what that means is that your current lender will send you a check for the 2,900 that you see here. If we close before they pay anything out, and so it wouldn't be 50,000. It would actually be closer to 53,000, as you can see here as well. All right, and so again, that's the information. We are leaving you, going back to this, we are leaving you at 76.53% of what the property is worth. If it comes back at the 490, that would give you about 24% equity still in your home, which is tons of equity in the world of real estate and mortgages. So, you do have equity. You're not maxing out all the equity in your home. Or if the value comes down lower than that, we still have some wiggle room to get you as much as we possibly can based on the final appraised value of the home. If you have any questions, you've got my number, 562-237-3683. 562-237-3683. And so based on what you told me, based on what I heard you tell me that were your concerns, I mean, it's almost just a no-brainer as it relates to getting the money that you need at the cheapest possible interest rate, which is, of course, tax deductible as well. And as always, check with your tax professional to verify that that is the case. But based on what I've seen, I don't see why it would not. But other than that, I just want to say thank you for your time. Again, sending this in video format to hopefully make it easier to understand, digest, and most importantly, so that you can go ahead and make an informed decision. Either way is okay. The challenges that we have, and with your file, is that number one, you're self-employed, of course. Number two, we're doing cash out, and number three, it is a conventional where you will be replacing or dumping the mortgage insurance on your current mortgage as well. All right. Again, call me. Let me know anything you need. I will go ahead and get this to you, or you have viewing it, because I got it to you, I should say, today. And if any questions, just simply reach out to me. Ideally, call me or text me so that way I can reply to you a lot faster instead of an email. And hopefully you can go give me an answer the sooner that you can. I do have your email address, obviously, because we will send out the disclosures to you once you tell me that you want to proceed via email, and you just simply sign electronically. There are a few things we are going to need that I'll just go ahead and tell you what they are. Shall you decide to proceed, and we'll take care of that at that time. Thank you so much for your time, and again, wish you the best. Thank you.